And joining us now is Tricia Rothschild, president of Apex Clearing. So Tricia, what are the biggest takeaways from the Millennial 100?
Sure, thanks, Jill. 2020 was definitely a year like no other. We're kind of in the catbird seat here at Apex Clearing, where we have about 10 million accounts across the 200 or so companies that we empower to do custody and clearing and trading. The Apex Millennial 100 focuses on 1.8 million millennials. The average age of these folks is 34, and really the account opening was incredible. There was a 146% year-over-year increase in the number of accounts opened by this cohort. The account size, while perhaps relatively small, also increased by 46%, which is, just in the fourth quarter, frankly. So we see so many trends that are fueling this growth, and we can talk about some of the stocks as well as some of the trends that we see.
I mean, no doubt why Moderna and Pfizer are popular. Of course, those are the names that are behind the vaccines for COVID. Do you expect that post-pandemic, if we can ever get there, that those names will still be popular with millennials?
Sure. I mean, we expect to see millennials continue to stay actively engaged. They actually, across all millennials, there's only about 7% of liquid assets in this country are owned by this cohort. And I think, clear catalyst for a firm like Moderna or Pfizer, which rose in the rankings by, 20 to 30 points. Moderna came in at 27 in the fourth quarter. Pfizer was number 20 in terms of holdings. And there's others that are also kind of on the up and coming as vaccines get developed. We also see growth in electronic vehicle stocks. Tesla, I'm sure you're going to want to talk about Tesla. 20% of the millennials' assets were in Tesla, and that is the number one holding, perhaps not surprisingly, across all age cohorts that we looked at.
Yeah, let's talk Tesla, because a lot of, I guess, not older traders, I mean, if we're talking just age and just more experienced traders, have been scratching their heads a bit at Tesla's just incredible run since the start of the pandemic. What is it about that company that's so appealing to millennials?
I tend to think of it, honestly, as a somewhat aspirational story. And almost all of the growth that we're seeing is, and this is also not surprising considering what a dire year 2020 was. Folks are looking for inspiration and technology that's fueling the future. And so the electronic vehicles, whether it's Tesla or a SPAC, actually cracked the top 5 among millennial holdings for the first time, NIO. So that there are certainly a rise in electronic vehicle firms across that industry that are capturing attention.
What do you expect to see from Gen Z?
So interestingly, Gen Z had one holding in its top 5 that was very different, which is Disney. Again, entertainment value, perhaps related to their rather innovative NBA hosting and being able to bring, I think, a little bit of joy to the Gen Z group. Gen Z actually had an increase in account opening even greater than the millennials on our platform. So nearly 170% year-over-year increase among Gen Z investors. So there's definitely some differences there. A little more interest in some of the beaten down travel names, United Airlines, American Airlines, Carnival Cruise Lines. Those rank a little higher in the Gen Z cohort than they do in others. So I guess those folks are restless.
Yeah, no, it's so fascinating to just kind of see the differences. And we know that millennials and younger people were a bit hesitant to get involved with the stock market, especially after the financial crisis in 2008. What changed? Why are we seeing so many more young people start to invest?
Yeah, I think this is the most interesting question, honestly, and it's rather a debate, right? Whether it will continue when the market is not just continually going up. I mean, one quick stat in that regard, which fueled the millennials account balance increase in the last quarter, was that 82 of the top 100 names that the millennial cohort held in the Millennial 100 went up. I mean, that's kind of shocking, right? So what's going to happen when there's more volatility in the market, when certain names pull back or the market as a whole pulls back. I actually believe that the increased engagement will continue. And the reasons for that are largely driven by technology, as well as kind of the commercial or the economics of it. So on that last point, clearly zero commissions is reducing friction and increasing access. And the technology point, which is arguably even more important, is around the increased and improved access, as well as the advent of fractional trading. So it really isn't about buying a full share or a round lot by any means. And people are able to put a smaller amount of money to work and get a little bit more engaged in that regard. And that's why I think, especially if you consider the wealth transfer and the fact that as the older generation passes money down and younger folks start to inherit, that engagement will continue. And that's where I think that 7% of liquid assets held by millennials will really continue to grow over the next several years.
All right, great perspective. Tricia Rothschild, president of Apex Clearing. Great to have you on this morning. Appreciate it.